So I'll be equally clear. This is Canada. We decide what happens here. Yesterday was more proof, as if any were needed, that the old relationship with the United States is over. And proof that we need to chart a new path. As I've been saying, this is a tragedy, but it's also our new reality. President Trump has been attacking Canada, America's closest ally, America's closest partner.
The U.S. once had Canada's oil flow on lock, its northern ally sending millions of barrels south every day without fail. Now that steady stream is shifting eastward, and America's caught off guard. For decades, Canada was the U.S.'s dependable oil partner, providing over 4 million barrels daily, cheap, secure, and close. But as of April 2025, that relationship is unraveling. China has moved in, hungry for Canada's heavy crude, and Canada's responding with a shrug and a handshake. Pipelines are being rerouted, deals are being signed, and America is staring at a growing disaster as its vital oil supply starts slipping through its fingers. Why does it matter? Oil isn't just energy, it's economic leverage, it's jobs, it's prices at the pump, and it's geopolitical power. When Canada shifts its barrels east, it doesn't just disrupt trade, it reconfigures the entire global chessboard. Stay tuned, because this story is packed with tariffs, pipelines, and a looming showdown between superpowers that you won't want to miss. Let's dive deeper. Meet the Trans Mountain Expansion Canada's billion-dollar power play aimed squarely at breaking U.S. dependency. This pipeline, on the verge of full operation in 2025, is no longer designed to supply American refineries. It's aimed at the Pacific, prepared to ship almost 900,000 barrels daily to Asia, with China first in line. It's not a drip, it's a deluge, and it's happening right now. Why the sudden turn? Canada's tired of being strong-armed by the United States. Years of price disputes, tariffs, and the infamous cancellation of projects like Keystone XL have left a sour taste. Meanwhile, China is waving cash and ironclad contracts. Vancouver's port is about to become a major energy hub, and the numbers are telling. Over half of the pipeline's output is already earmarked for Asia. With this move, Canada isn't just diversifying, it's rewriting the rules of global trade. The U.S. assumed proximity meant control. They were wrong. With Trans Mountain redirecting the flow, Canada is betting big on Asia's growing appetite for energy, and China is all smiles. But it's not just Beijing. India, with its heavy crude-hungry refineries, is lining up as well, and trade talks as of April 2025 are heating up. Japan, anxious about Middle Eastern instability, is also eyeing Canadian crude. This isn't a blip, it's a major realignment. For decades, oil moved south. Now, Asia's the prize. India may soon lock in 200,000 barrels a day, and Japan another 150,000, each deal tightening the screws on U.S. dominance. Canada's new strategy is to smartly spread out buyers, reduce risk, and strengthen leverage. The payoff is massive. If China, India, and Japan solidify these deals, Canada gains a $1 trillion market, and the West loses critical influence. America's losing more than oil, it's losing a monopoly it thought was permanent. Canada's playing smart, and China's pulling off a silent coup. China's sprawling industries need heavy crude, and Canada is stepping up. Trade chatter and insider reports confirm fresh contracts are in motion. Hundreds of thousands of barrels once headed to U.S. refineries are now sailing toward Chinese ports. Why Canada? Stability. Middle Eastern oil is risky. Russia's unpredictable. But Canada is a dependable partner with massive reserves. China's not just thinking short-term, it's securing energy for decades, playing chess while others are still setting up the board. Rumors suggest China's looking to lock down even more, maybe up to 1 million barrels daily by late 2025. The message is clear. China's securing its future, while America scrambles to react. Energy dominance defines superpowers, and Beijing is quietly cornering the market. Canada's oil is no longer just a commodity, it's a weapon in China's strategic arsenal. The shift is real and measurable. In 2024, Canada accounted for 61% of U.S. crude imports, over 4.2 million barrels daily. With Trans Mountain diverting nearly a quarter of that toward Asia, projections for mid-2025 show U.S. imports dropping below 3.5 million barrels a day. That's not a minor dip. It's a gaping hole, and the pain is immediate. U.S. Gulf Coast refineries, built to handle Canadian heavy crude, are facing shortages and rising costs. Gas prices are ticking upward, and by fall, $4 a gallon could become the new normal. America believed Canada would never stray, but that assumption is collapsing. The hard truth? Geography isn't loyalty. Energy security is cracking, and America's dominance is visibly eroding. Idle refineries, lost jobs, and shrinking global influence, the consequences are serious. Canada isn't an enemy, it's simply putting its own interests first. What triggered this pivot? Tariffs. In 2024, the U.S. slapped duties on Canadian exports of steel, lumber, and yes, oil. Canada retaliated, but the real blowback is unfolding now. Oil's flowing east, not south. Tariff negotiations are still deadlocked as of April 2025, with whispers of a 10% levy on Canadian crude circulating. Canada's answer? Fine. China's buying. The irony's brutal. U.S. policymakers thought tariffs would bend Canada to their will. Instead, they shoved Ottawa into Beijing's embrace. Data shows a 20% surge in Canada's Asian exports year over year, led by oil. It's not spite, it's survival. Why sell at a discount to a hostile neighbor when Asia's paying top dollar? The big lesson here? Trade wars have consequences. America flexed, and Canada found a better partner. And it gets worse. Russia's sniffing around. With Canadian oil leaving U.S. markets, Moscow sees opportunity. Russian officials reportedly met with Canadian energy executives in early 2025, proposing joint ventures. If Canada partners with both Russia and China, it's not just a lost supply line, it's a strategic disaster. Moscow already ships 1.6 million barrels daily to China via Siberia. If Canada joins that supply chain, a powerful oil bloc forms right under NATO's nose. The risk, real and rising. Russia thrives on chaos, and it could easily exploit America's faltering grip by flooding Europe with cheap crude or deepening ties with Canada's new buyers. Either way, the global oil landscape tilts away from the West. Meanwhile, China's securing its future without firing a shot. With Canada's crude flowing east, China's factories, cars, and cities are fueled for decades. It's not just a short-term win, it's a strategic victory that could echo into 2030, 2040, and beyond. The U.S. still powerful, but bleeding. Losing Canadian oil shakes America's North American energy fortress. It's not a death blow yet, but it's a major crack. Gulf Coast refineries are desperate, policymakers are scrambling, and rivals are circling. America's still a giant, but even giants stumble. Canada's not malicious, it's just tired of being underestimated. And while the U.S. fumbles, Canada's making bank. Billions are flowing in. The stakes are brutal. Energy is power. China's gaining. The U.S. is slipping. And Canada's playing the field smart. This oil war is bigger than barrels. It's about control. And right now, China's winning. Inside Canada, the Trans Mountain expansion isn't smooth sailing either. Protests are raging. Environmental activists are chaining themselves to pipeline infrastructure. Indigenous groups are filing lawsuits. Footage from Vancouver and Alberta shows tense standoffs, arrests, and fiery public outcry. But the lure of $20 billion annually in Asian oil sales is too strong. Ottawa's betting economic gain will outweigh political pain. The gamble is massive cash now, controversy later. Meanwhile, U.S. officials aren't staying quiet. Sanctions are being floated behind closed doors, aimed at punishing Canadian oil firms. Canada faces a choice: cash in now or risk long-term retaliation. The ugly truth? Oil's never clean, economically or politically. Canada's playing a dangerous game. It could win big or crash spectacularly, and globally, the shockwaves are already being felt. Oil prices are climbing. Brent crude is up 8% since January, nearing $90 a barrel. Smaller economies reliant on U.S. oil, like Panama, are feeling the pinch. Supply routes are rerouting, clogging Pacific shipping lanes. Asia's refineries are thriving, Europe's markets are groaning, and traders are calling this the start of a new oil era. The world is waking up to a harsh reality. No one is insulated when superpowers clash over resources. Instability is the new norm. Canada's boom could also bust. Electric vehicle sales surged to 20% globally in 2024. Solar energy is cheaper than ever. By 2030, oil demand might plateau. Canada could be doubling down on a market that's already peaking. China's aggressively pushing EVs. If Asia's oil hunger fades, Canada could find itself stuck with underused pipelines and fading demand. Court battles, environmental pushback, and green tech innovation are wild cards that could shift the game fast. Canada's betting it can ride oil's final wave to riches, but the tide's shifting and fast. America's not out of moves yet. Options are on the table. Ramp up domestic drilling in places like the Permian Basin. Negotiate better terms with Canada. Offer incentives instead of punishments, or go nuclear and sanction Canadian crude. But time's slipping away. China's not waiting. The global chessboard's already tilting. Canada's pivot is live. The U.S. can still claw back some ground, but it needs action, not just words. Big picture? This oil battle is just the first skirmish. The real war for energy dominance will define the next decade. The fight is on. Canada's cashing in, China's stacking wins, and the world is watching every move. This oil saga? It's only just beginning.